Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investors. And today I want to talk about the Walt Disney Company, which jumped up over 13% on Friday to $175. I want to talk about why this happened and what to do now with my position in my portfolio. And this jump just happened despite the Disney parks are closed. The Walt Disney revenue dropped in the last quarter over 20%, and they have to lay off, or at least have to lay off plans to 32,000 employees in the first half of 2021. So there are a lot of problems, of course, by the pandemic for all of the Disney company and especially for the parks. And they also have to suspended their cash dividend. So a lot of bad news. But despite of all of this bad news, the Disney stock just jumped up to the all-time high. And the reason for that, the reports from the investor day of the Disney company. And in this investors day, they just lifted their expectations of the paid subscriber outlook for Disney Plus. Now they expect 230 to 260 million subscribers by the fiscal year 2024. And this is big lift from the expected numbers until now. And so the stock price just reacted like that and jumped up over 13% on Friday to an all-time high. And so after forecasting at an April 2019 rollout that Disney Plus could hit 60 to 90 million subscribers in fiscal year 2024, last night the company essentially tripled that forecast to 230 million to 260 million after reporting it was already near 90 million subscribers. And what's even more incredible with Hulu and ESPN Plus, the other platforms, they could reach 300 million to 350 million subscribers in the global streaming market. And this is really an incredible number for just this short term in which Disney Plus is available. And with that, they plan to spend 14 billion to 16 billion a year by 2024 with ramp to 100 new titles per year. And in another video about Disney, in my first video about Disney where I took a deeper look into the whole business, and even then with the lower expectation numbers, it was clear that Disney Plus could really have a high potential at this time to be a 30 billion giant. But now with this very fast growing and the expected subscriptions of maybe 250, 260 million by 2024, this could be even a lot bigger. And all of that is just a reason why the Disney stock surges on Friday or even for the last few weeks. And so the question becomes, what can I do with my position in my portfolio? I bought my Disney shares at the 13th of April for $103.50. And now we are at $175. And of course, this is a big gain. Over 70% is a gain. And so the question becomes, what can I do next? Should I add more because of the positive news with Disney Plus, or maybe should I sell because this is just very fast up over the last few weeks? And so, as I said, my position is now up 73% and is the best performing stock in my whole portfolio. I really think about what to do with that. When I made my first video about Disney, the intrinsic value, or my calculated intrinsic value, was around $130. And so now we are way over this $130 of intrinsic value. But of course, with the new forecast, also the intrinsic value rose a little bit to now $150. But even then, we are almost 20% over the intrinsic value. Here I just have an Excel sheet with all of the holdings in my portfolio, with the buy price and also with the current price. And so now we are 18% over the intrinsic value, and it's the question, is it time to sell? I decided for myself I will not sell at this moment. If Disney will surge even more and will go over $200, then really I think it's way overvalued and maybe on a peak. So that's maybe time to sell. But at this point, I will just hold my position because 18% over the intrinsic value is not that much. that I want to sell at this moment. And so I just try to keep cool and just hold a great company and hope that it will come back to normal and even the parks can make revenue and open again and everything will be fine. And then we have a great company because of the parks and all the other sectors, plus the new Disney Plus section with the big impact. And then overall, Disney is even stronger than ever before. And so right now, I'm just happy to hold this position. And with that, just the weekly insight to my portfolio. And first, start with the dividends. And this week, I received my dividend from Chevron with $39.47. And I also bought this week some more shares of Intel. I bought Intel at some different dates and now around $50 again, here for $49.21. I'm very happy, I'm very bullish for Intel. I think it's undervalued. You also find a deeper analysis of Intel here on my channel or just up on the screen. Just feel free to even check out this, and then you maybe also understand why I so bullish on Intel. And with these moves, my whole portfolio looked like that. As I said, Walt Disney with the best performance right now with 73%, but also all the other stocks perform really well. Wells Fargo is the only position in the minus, and you also find a deeper analysis of Wells Fargo, and you also find there the explanation why I don't add more of Wells Fargo at this moment. So also check this out. And as you can find deeper analysis of Intel, Wells Fargo, and Disney, you also find deeper analysis of each of these companies on my channel. I hope you find any value in these videos. I just explain the whole business model, go through the financial numbers, calculate the intrinsic value, and then I just tell you when I bought and why I bought my shares. So, and if you find any value in this, just subscribe to the channel and give me a big thumbs up. This also helps the YouTube algorithm a lot. And so the pie of my portfolio just look like that. I still have a cash position of almost 18%. And of course, my Intel position now is rise over 5% of the portfolio. Right now, I don't want to buy into new companies because there's not a lot of companies undervalued right now in this overall overpriced market. So as I explained in one of my other videos, right now I take a look still at Intel to maybe add more around $50. The other is Berkshire. I also want to add there a little bit more for reasonable prices. So no big investments right now because the market overall seems really overvalued. And so there are not a lot of bargains right now. And last but not least, here a look at the overall performance of my portfolio. I started this North American portfolio a little bit over a year ago at the 2nd of December 2019. And since then I have a performance of 40.23%, which is a nice outperformance of over more than 22% to the S&P 500 in the same time span. And this is really a good result so far, even over a short term of time. I'm a long-term value investor, so we will see how this will work out over the long term, but so far so good. So that's it for today. If you liked the video, please subscribe to my channel and ring the notification bell to never miss another video. And if you really like the video, give me a big thumbs up and tell all your friends that here is a channel rising of long-term value investor with no bullshit and just serious stock market analysis and an insight to a real money portfolio, which is not very often here on YouTube. So that's it for today. See you then. Take care. Bye bye.